The big money news continues to happen every single day. Berkshire Hathaway just bought Taylor Morrison for $8.5 billion. Now, Taylor Morrison might not be somebody that you know, but it is one of the nation's large home builders. Now, back, I don't know, 6 months ago or so, I talked about Warren Buffett making investments to the tune of $1 billion into Lennar and D.R. Horton. And I said, Warren Buffett, as an investor, rarely makes mistakes when it comes to long-term investments. Now, Berkshire Hathaway, Warren Buffett's company, that he's the chairman of the board of, though the new CEO, Greg Abel, this is his first big move, buys the entirety of Taylor Morrison for $8.5 billion. Again, they're not looking at buying or investing in home builders with the idea that, hey, let's just do a sunk cost scenario and throw money at something that doesn't work out. If you've looked at Berkshire Hathaway shares, they are pretty hefty and their investors expect a lot from them. They own notable companies like Geico Insurance and so many others, Dairy Queen, and yeah, the list goes on. They make very good, very sound investments. And between having a nice stake in Lennar, a nice stake in D.R. Horton, now they own Taylor Morrison. So they are very, very bullish on the future of new home builds. Population keeps growing, it all makes sense. And they also know that cycles go through exactly that, right? They're ups and downs. And while we've been in a down cycle, here's kind of a wild point to think of. We actually hit the interest rate spike in June of 2022. Now we're in June of 2026, so we're 4 years. That's actually the longest window that we've had of some sort of depressed market, regardless of how prices go or interest rates go. The last one was after the big crash. Now, we haven't had a big crash, right? We've had a stall. We've had political uncertainty. We've had inflation uncertainty. We've had, uncertainty around many things, potential job losses and layoffs as a result of the economy and what have you, even though our stock market is as strong as ever. So overall, the last time it was a housing crash based on faulty lending, based on the housing market. And we peaked at the end of 2007 and we bottomed in 2011. Again, a 4-year period, just short of 4 years before we hit the springboard and started coming back up and had a rally longer than our normal 7-year upcycle from 2011 all the way through June of 2022. So we had an 11-year upcycle. So now we're in our down cycle and we're at 4 years, but there's a lot of things going on, again, between wars and political uncertainty and inflation coming down, but then spiking back up a little bit, where